Okay.
All right. Hello, my favorite people. Do I have all my teams on, my Florida and my Tennessees? Is my
Florida. Yep. Florida's here.
Tennessee's here.
Hi, guys. Let's get this ball rolling. I wanted to make a quick introduction. Hope is on the line here. Hope is going to be driving this thing. David and Hope worked very hard to consolidate our teams and bring this insurance program out here to fruition, and I'm very, very grateful for it. They're handing the baton to me for administrative purposes, but we want to do our hats off and a hand clap for these guys because it was a lot of work and a lot of calls to put this thing together. Hope's going to say a little bit about herself, and then we're just going to hit the ground running. Is that okay with everybody?
Okay, so hi guys, my name is Hope. I am with McGriff Insurance. I am the broker that worked with David and Billie to put these plans together for you guys and try to get them rolled out for a 1/1 effective date. It wasn't an easy process. It's been a lot of work behind the scenes to make sure that we got good plans, got good rates, and it's gonna require a little bit of work on your behalf as well, getting paperwork in, but we think that this is the best option for Hobbs going forward. So I'm going to go through this presentation, guys, and if you have questions, feel free to chime in. I think it's better if you ask it when we're talking about it rather than waiting until the end and not remembering what it was you had a question about, okay? All right, so 2019 benefits. Your medical is remaining with Anthem. However, it's a whole new plan offering being rolled out. And one of the new plans that you guys are going to have access to is a high deductible health plan with an HSA account, which is something that, again, we worked very hard to put together to be able to offer to you guys. It's something. Yep.
Who had a question already?
Okay.
All right.
All right, so moving on. And then we also consolidated the dental plans, and we're rolling out a brand new dental plan. Again, it's still with Anthem, very similar to what you had, but these are both brand new offerings. They're going to have new ID numbers, new group numbers going forward effective January 1, okay? So this is your annual open enrollment period, guys. This is your opportunity to make any changes to your plans that you want to make. And that being said, you can add a spouse, remove a spouse, add a child, whatever the case may be. But this is your only opportunity to do that. Outside of this open enrollment period, you have to have a life qualifying event in order to make a change to your plans. Because your plans are pre-tax, this is an IRS rule, and they will not allow you to come on and off plans, wishy-washy, however you want to do it. You must have a life qualifying event. And listed up on the PowerPoint are just a few things that do qualify: a birth of a child, divorce, marriage. Those are all life qualifying events. If your spouse loses their coverage, that would be a life qualifying event for you to make a change on your plans here at Hobbs. But keep in mind, you have 30 days to notify Billie of this life qualifying event. Otherwise, you're kind of out of luck until next year, okay? All right, so let's talk a little bit about preventive services. All of these services and a whole host of others on the IRS website, the list is probably a good 2 pages long of services that are all covered at 100% before your deductible, okay? There are no co-pays, no co-insurance at all associated with these. So everybody should be getting a routine physical, cholesterol checks every year, prostate exams, PSA, to include a PSA exam. Ladies, your mammograms, GYN exams, all covered at 100%, colonoscopies, routine adult and child immunizations, flu shots. This is all 100% covered. It does not cost you anything. So you should be taking advantage of these preventive services every year. All right, so a couple of things. What can we do to control future costs? One thing I want to let you guys know is that we are moving, Hobbs has moved from a pooled middle market group, and we're moving into a large group market because now we have over 100 employees. And what that means is now we are going to be rated based on our claims experience here as a group. So couple of things you want to do. You want to make sure that you're getting your routine screenings. You want to shop around for prescription drugs. If you guys have never heard of Good RX, you might want to write that down so that you can use that tool to compare between different pharmacies the cost of a prescription drug. You'd be amazed at the differences between a Walgreens and, let's say, a CVS pharmacy on any particular drugs. So that's a great tool for you to use. Anthem also has a cost estimator so that you can estimate different procedures that you might require in the future. That's also a good tool for you guys. We'll talk about that a little bit more in a second here. So the first thing I want to impress upon everybody is to go to anthem.com and register. Because on this website, you can do a wealth of things. You can find a doctor. You can get paperless communication. So you can look at your real-time explanation of benefits. You can see your claims come in real time. You can estimate costs of a procedure that you need to have done in the future. This is a great tool available to you guys, and they also have an app that you can download as well. Again, cost estimator. The example I gave in the morning meeting was your doctor says you need to have an MRI and he is recommending you go to facility A. Just because he recommends you go there does not necessarily mean that that's where you have to go. You can go out to Anthem's cost estimating tool and plug in the procedure or the MRI that you need to have done, and it will give you a 15 or 20 mile radius of different facilities and the different varying costs for each facility. So if you're on the high deductible health plan, this is a wealth of information for you to use so that you can make sure that you're getting the best deal because it's coming directly out of your pocket up front. Any questions about the cost estimating tool? Again, there is a mobile app, and on this mobile app you can do everything that you can do on your desktop. You can look at doctors' profiles, you can find a doctor, you can search for pharmacies, urgent care facilities that are all in the network. You can also download your medical ID card directly to your phone so you don't ever have to have a paper card. So it's very cool. You also have access to a 24-hour nurse line. So Saturday afternoon, your daughter's running a fever. You don't know if you should take her, into the urgent care or what you should do. You do have access to this 24-hour nurse line to help advise you of that, whatever that circumstance is. Live Health Online. This is another reason why you absolutely need to go and download the Anthem.com app, because this will give you the option to Skype to have a virtual doctor's visit, essentially. You download it, put in all of your information, put your insurance information, answer some basic medical questions about yourself, and just have it available to you so that on that Saturday afternoon when your daughter is running a fever and you're not sure if you can get her into urgent care or PCP, you can get on the phone and Skype with a doctor, and if the doctor can diagnose you during that visit, he has the ability, or she has the ability, to call in a prescription to your pharmacy for you. And if you're on the high deductible health plan, it's a $49 copay. If you're on the traditional medical plan, it's a PCP copay. So this is a great tool for you guys, especially if you're traveling, again, on the weekends, those types of things. Obviously, if you're having a true emergency, we want you to go to the emergency room or to urgent care. But if it's a simple sinus infection or a pink eye, a rash, something that could be diagnosed during the virtual visit, it's an absolute wonderful tool for you guys. Has anybody ever used it? Anybody on the phone? No?
You guys can unmute to talk to us.
There's also a Future Moms program, so if anybody is pregnant or thinking about getting pregnant, this is also a very great tool for you to chat with a nurse and to enroll in this program, and they will kind of guide you through that 9-month pregnancy. Another great tool available to you. The network that you guys are going to be in is the National PPO Network, so it's good all over the United States. You're not going to run into any issues with, not being able to find a doctor or a facility where you are in Tennessee and or Florida, because you're going to be in the national network. Okay, these are the 2 plans that are offered to you. The first one is the new high deductible health plan. And I'm going to go through how this plan works. If you have questions for me, just stop me and I'll be happy to explain them. The first thing I want to point out to you is that your preventive care is covered at 100%. There's no deductible, there's no cost share whatsoever. All of those preventive things we talked about early, covered at 100% still, okay? Everything else, primary care physicians, urgent care, outpatient surgery, inpatient hospital, emergency room, all of those services are subject to a $300 individual deductible or a $600 family deductible. Once you reach that $300 deductible, your medical services for the rest of the calendar year are covered at 100%. The plan has a $4,000 per member out-of-pocket maximum. What that means is once you reach the $300 deductible,
Ma'am, I think you mean 3,000.
I mean 3,000. Yep, you're correct. 3,000. You do have co-pays for your prescription drugs, and that's when they kick in. And that's how you get to that additional $1,000, which is a total of $4,000 for an individual, $8,000 for a family. The drug co-pays after your deductible has been met is a $10 for Tier 1, $40 for Tier 2, $60 for Tier 3, and 20% for Tier 4, which are your specialty drugs. So those are like the Harvonies and the really expensive drugs out there that cost thousands of dollars. Your maximum exposure per that prescription, if you're taking one of those 4-tier drugs, is $250 per script. It does. Yeah, Billie also emailed to you guys a list of preventive drugs. Those preventive drugs are also covered before the deductible, and they are covered at 100%, no cost to you. Yes. So this was another negotiation that we were able to get Anthem to agree to without increasing premiums. So take a look at that list. If you are taking any of those drugs that are on the preventive list, they are covered 100% before the deductible. Are there any questions about that? All right, and then the second plan is going to be what we call a traditional plan. You guys are probably familiar with it. The Key Care 30, $1,000, 20%, $4,500 out-of-pocket maximum plan. This plan does have primary co-pays before the deductible. Those co-pays are $30 for a primary care and $50 for a specialist. Again, your preventive is all covered at 100%, no copay, no cost share. Urgent care is a $50 copay. The deductible, if you were to go into the hospital, need outpatient diagnostic testing, outpatient surgery, emergency room, all of those services first have a $1,000 deductible, and then you pay 20%, Anthem pays 80%, until you've reached an out-of-pocket maximum of $4,500 per member or $9,000 per family. The prescription drugs are exactly the same, except they do not have a deductible associated with them. So your co-pays for your prescription drugs kick in immediately. But again, the preventive, everything on that preventive list is also covered at 100% no cost share on this plan as well. Any questions about these two plans? There are out-of-network benefits on both of them, but keep in mind that they are two separate buckets of money and they do not marry. So if you do go out of the National Blue Cross Blue Shield network, you're going to be looking at a higher deductible of $6,000, higher coinsurance of 30% on that high deductible plan, and then a higher out-of-pocket maximum of $8,000 and $16,000. And again, they're two separate buckets of money. So whenever possible, try to make sure you're staying within that Blue Cross network. All right, so this is new for you guys, the HSA plans that we're rolling out for 2019. What is an HSA plan, a health savings account? Well, it's a triple tax advantage plan. Funds are deposited into your HSA account pre-tax, so they're coming straight off the top before you have to pay FICA taxes. They grow tax deferred, and they come out tax-free for any qualified medical expenses. So any qualified medical expenses that the IRS deems as a qualified medical expense. The account is owned individually by you, so you're invested in it immediately. If you leave the company, you take the account with you. The funds belong to you. They roll over year to year. You don't lose. It's not a use it or lose it kind of situation. It's a use it or keep it. But you must be enrolled in the high deductible health plan in order to open up a health savings account. You cannot have this account with the traditional KeyCare 30 plan. So who is eligible to open up an HSA? Again, you have to be enrolled in a qualified high deductible health plan. You can't be enrolled in your spouse's medical plan or your spouse's flexible spending account unless it's a limited FSA. Limited FSAs are for dental and vision only. You can't be enrolled in any part of Medicare or TRICARE. And you can't be claimed as a pendant on somebody else's tax return. So in order for you to use your HSA funds, they have to be a tax dependent to do it. And I'll give you an example of that. If you have a child on your plan that's 25 years old and working and filing their own tax return, you can't use your HSA funds to pay for their medical expenses because they are not your tax dependent any longer. Do you guys have any questions about that? You're a quiet bunch. Okay, again, you can take out those funds, tax-free withdrawals from your HSA account for any qualified medical expenses that the IRS deems qualified. You can use the funds to pay for your deductible and your out-of-pocket maximums. You can use it for dental, even braces, LASIK vision expenses, LASIK surgery. You can use it to pay for long-term care policies if you were to purchase an individual long-term care policy. And you could also use it to pay for COBRA premiums. So if you were to leave the company and go to work for another company that didn't offer coverage for 60 days, you could use your HSA funds to pay for COBRA to bridge that gap for you until you get onto your new employer's plan. The one thing I'd like to stress is you can't use it for over-the-counter medications. Unless your doctor gives you a prescription for a specific cough syrup, then you can. But just regular over-the-counter medicines, you can't use it. The IRS says that is not a qualified medical expense.
Question, why can't we use it for the KeyCare 30?
Because that is not a qualified high-deductible health plan.
Is that a government regulated or is that a plan function?
That's an IRS regulation. There's certain perimeters around what is a qualified high deductible health plan. And one of the perimeters around that is you can't have any benefits other than the preventive, which came with ACA, before the deductible. And that Key Care 30 has copays for primary care physician and specialist before the deductible. So that's just one of the perimeters. It has to be a high deductible. It has to be $2,300 or higher to also qualify for as a high deductible health plan. Did that answer it? Your question?
Yeah, sorry. I didn't understand the 2,300 part, but.
Well, no, that's the lowest deductible that the IRS says would qualify as a high deductible health plan.
Okay.
Yeah, and not many carriers even offer a deductible down that low for a HSA plan. Again, if you retire or if you leave, you take the account with you. It is a bank account that belongs solely to you. You can no longer make contributions into the HSA unless you are covered under another qualified high deductible health plan. But you can spend the money down. You can use the money for qualified medical expenses. You just can't add any additional monies to the account unless you are covered under another high deductible health plan. For 2019, the IRS says the limits for a single individual is $3,500. So this is the maximum amount the IRS will allow you as an individual to put into that HSA account each year. If you're covered as a family, it's $7,000. And if you're over age 55, they will allow you to do catch-up contributions of an additional $1,000 into that account annually. Keep in mind that if you do overfund it, that you're going to pay a 6% penalty to the IRS for overfunding, overcontributing. So make sure that you keep those amounts, keep track of what you're putting in there because you don't want to have to pay that penalty. Once you enroll in the high deductible health plan, an HSA account is automatically going to be opened for you through Anthem and through ActWise. So a couple of things need to happen. If you want the HSA account, you need to go online and make sure that you register with them so that you can start accessing your funds through ActWise. If you don't want to have an HSA account, you need to actively let ActWise and Anthem know that you don't want the account open because there is a $2.25 fee associated with these accounts monthly. So if you don't plan on making any contributions into your HSA, make sure that once we get this up and rolling and you're notified that your account is open, that you reach out to Anthem and close that account.
What if you already have an HSA account established from a previous employer?
You can keep that. So
I just have to get that information to you guys so we can start depositing into it?
So one of two things can happen. You can keep it and you can continue to make contributions through payroll into that account. Or you can roll those funds into this new account, the ActWise account. And the reason I kind of would encourage you to do that is because this ActWise account is integrated with your Anthem medical plans. So you'll be able to see your claims, you'll be able to see, you'll be able to take directly from the website and pay a claim that came in directly from your HSA. It's fully integrated. You don't have to, but it's my suggestion that you would want to roll those funds. If you don't want to roll those funds, you can keep the account where you are today. Make sure you close the ActWise account once it gets opened and get with Billy so that your contributions can come out pre-tax into the account you currently have.
Okay, thank you.
Yep, and the other piece of that, guys, is there is a $1.50 paper statement per month. So I would also encourage you to go online and elect to go paperless so they don't charge you that $1.50 statement every month. Paper statement fee. So there's also a chip process. So how this works is once we get everybody into Anthem's system, If anything gets kicked back because they can't verify that you are who you say you are, then you're going to get a notification in the mail from ActWise, and they're going to require you to send in a driver's license, a passport, something of that nature, a copy of it, so that they can verify who you are. This doesn't happen very often. Maybe 3 to 5% of the time people will get kicked back. But if it does happen, you need to make sure you respond immediately to the request. Otherwise, they're going to automatically close your account, and you're not going to have that available to you. All of this information, you have 3 days to respond. So you got to kind of like do it quickly. But again, I'm pretty sure you can just upload that copy right to Anthem's website. So it should be a fairly simple process. You can also fax it as well. This is the debit card that you will get once your account is opened. And this debit card works like any other debit card. Now, obviously, you got to have money in your account to spend it. But to give you an example, if you go to the doctor and, it's $175, that's what they submit to Anthem. You pay nothing at the time because they have to send the claim to Anthem. Anthem has to adjudicate the claim, and then they're going to pay at whatever their discounted rate is because they have contracts with these doctors and these facilities. So the charge was $175. Anthem allowed $85. You're going to get a bill for $85, not the $175. That $85 goes towards your deductible, but you can then reach out to the doctor directly and give them that credit card number, and it can come straight out of that account. Or you can go, again, to Anthem's website and just pay it directly from there. Pull the funds out of your HSA and shoot them over to that facility or that doctor. Yes, ma'am. Yeah.
You're saying, so if you go to the doctor, you're not going to get charged the full amount if you use...
You won't. No, you're going to go, as long as you're using a contracted physician or facility that's in the network, you're going to get the discounted rate, the contracted rate, regardless of you using that card or not. You're going to get the contract. You're only going to be responsible for the negotiated amount, not for the full amount. Do you guys have any questions about the HSAs, how they work, making contributions? You guys on the phone?
Any thoughts in regards to maybe a single plan versus a large family plan? It would seem to me that a single plan would be better with the HSA, but a large family plan might be better with the Anthem KC30 plan.
Well, something that you kind of have to keep in mind, and I'm going to back up a few slides because I want to show you something. And again, it's a personal choice. I don't know what your family situation looks like financially. Young kids, older kids, sick kids. That's really something I can't totally advise you on. Except, I want you to look at this screen again and look at the out-of-pocket maximum for both of these plans. So for an individual on the high deductible plan, it's $4,000, $8,000 for a family. On the Key Care, it's $45,000 and it's $9,000. So your exposure on the traditional Key Care 30 is more than it is on that high deductible health plan. Your total exposure. So that's one thing to consider. The second thing I want to point out to you is the deductible is embedded. So what that means is if you have a family of 5 people and mom has a surgery and reaches that $3,000 deductible, mom's medical expenses for the rest of the year are covered on 100%. The remaining 4 family members have the additional $3,000 collectively before that family out-of-pocket maximum is met. Does that make sense?
Yes, ma'am.
Okay. So again, it's a personal preference. It goes back to what your situation is financially. which you're, if you have a healthy family, because the bottom line is the out-of-pocket maximum. And on the high deductible health plan, it's actually less than it is on the Key Care plan.
We have an additional question on this end. Is there any matching for the HSA or any kind of additional funds for the HSA if you go that route from Hobbs?
Currently today, the answer is no. I don't know if going forward, first of all, we're just rolling this out, obviously, first year. So we're going to see what things look like going forward. But at this point, Hobbs will not be making any contributions into your HSA for you.
Okay, thank you.
Ideally, what you would want to do is look at the premium difference. So if you're a single person, that premium difference is about $40 a pay period. Is it about 40? I'm not looking at it.
No, I'm sorry. Which one?
That's okay. And ideally, what you would want to do is you would want to take that difference in premium and you would put that money into your HSA account and just do that every pay period and let that money sit there and grow. Because I can tell you this, if you go on the HSA, high deductible health plan, and you do that and you have a pretty good year, you maybe only had to use a virtual visit or whatnot, and you've got $4,000 sitting in that account, or $3,000 sitting in that account at the end of the year, you're better off, because if you were on the traditional plan, you pay that money to Anthem and you never really use the plan anyway. Anthem's not going to give you a refund on your money. So, but again, it's personal preference. I'm not trying to sway you either way. Just want to give you all the facts and all the information so that you can make an educated decision about it. Okay? All right, dental. Essentially, the dental is basically the same, but we're going to be in the 100+ group market. So, because we combined everybody, essentially. And so the plan is basically the same that you have today, a $50 individual deductible, $150 for your family. All of your preventive is covered at 100%. So that's cleanings, x-rays, fluoride and sealants are for children. Basic services, it's a $50 deductible, and then it's covered 80-20. Anthem pays 80, you pay 20. And that's for fillings, extractions, basic endo, perio, and oral surgery. And then there's also coverage for major services, which are dentures, implants, crowns. And that's 50-50 after the deductible. And your annual bucket of money to spend is $1,500 per individual, per family member. And your preventive does not go towards that. So that's a very large bucket of money, actually, for dental. And then if your children need braces, it's 50-50 up to a lifetime maximum of $1,500. So $1,500, it's not great, but that's the maximum you can get for ortho coverage. So any questions about the dental? Okay. All right, so let's talk about what needs to happen now. These plans are going to be effective January 1, 2019. You guys are going to be on a calendar year deductible, which it's good. It's a good thing. Currently, your plan's renewed in August, and you are on a calendar year deductible, but your plan's renewed in August. So if Anthem made any changes, increased out-of-pocket maximums or deductibles to your plans, that was an additional cost to you when it renewed in August. So going on a calendar year renewal and deductible basis is a good thing. So I want to point that out to you. Secondly, you guys have until the 26th to get all of your paperwork back into Billie. And I'm going to tell you, this is absolutely mandatory that everybody complete a new application or waive, complete a pre-tax form, selecting the plan you want to enroll in, selecting whether or not you want payroll deductions for your funds to go into your HSA account. because effective 12/31 midnight, your current plans will no longer exist. They will be terminated. They're canceled by Anthem. So everybody has got to complete a new application. The other thing I want to point out to you guys is the applications need to be clean. They need to be legible so that Billy can read them, so that she can key them into an enrollment census. If she can't read them and get that information in, or if a date of birth is missing, or incomplete social security number, those types of things, that's going to hold up everybody getting their ID cards, because we have one submission with everybody on that enrollment census. So please make sure that the applications are complete. Spouses and dependents' dates of birth and social security numbers are on there, and they are complete, because we don't want to hold up everybody getting their ID cards. The second thing is make sure you get your prescription drugs refilled prior to December 31st. So if you need a drug, you're going to need January 1, try to get it filled prior to. Again, because ID cards are not going to be in hand January the 1st. It's probably going to be mid to late January before we physically have cards in hand. So same is true for a doctor's appointment. If you have one first part of January, you might want to push it out to the end of January, first part of February, or try to get it done prior to December 31st. You guys have any questions about that? No questions?
So quiet.
All right. Well, if you don't have any questions, do you have any questions for Billy?
I had one more question. What if you've already met your out-of-pocket for the year on your current plan? Does that just go away January 1st and you start over?
Well, regardless, even if we weren't rolling this out on a whole new platform, it would start over January 1st, because your current plans with Hobbs is on a calendar year deductible. So even if we weren't making this change, your deductible would restart on January 1, correct? And your out-of-pocket maximum resets.
Derek says, I'm not eligible until February. Do I still need to fill out the application? And Derek, yes. I would like for that application to come back. I know you're not eligible until February, but that will make it easier for you to have your card on time. He's young. So go ahead and complete and make your selections and send that back. And then by the time you're eligible, you will have your card in hand.
Correct. Yeah, even if you're in the new hire waiting period right now, it's a good idea to go ahead and complete your application and get it back to Billy, so that once the initial enrollment submission is done for everybody that's currently eligible, that gets uploaded, and then Billy can get applications to go and on the portal and add people as they become eligible. But getting the paperwork done now is the best thing to do.
I will not have the luxury of chasing you guys down for it. So if I don't have it, you're out of luck. So I will be catching up with you guys and sending off one email, but that's about as far as I can go, saying I don't have it. And it will be to GMs. If I need to talk to you guys about missing stuff, I will talk to you guys. But I'm not going to be chasing because I don't have the luxury. So that's not going to be something that I can do very often.
Hey, Billy, question for you. Did our previous Anthem Dental include the orthodontics?
Yes, it did.
Okay, so that's very similar?
Yes, very similar to what we currently have. That a lot of that didn't change. The $1,500 was, in fact, what the orthodontia was covered with our current insurance. Yes.
It's essentially identical. You're just going to be in a different market segment, but it's essentially identical to what you currently have today on the dental platform.
But a benefit of the HSA, if you go with the high deductible, you could use that to cover the gap.
Yep,
You can.
absolutely. You sure can. Yep. You just have.
How do we set up the HSA, Billy? I saw that I didn't see any place to indicate that on the forms. Is that afterwards?
No, actually, I sent with the invitation that I sent off just earlier today. That was when I sent off the link. There is a bunch of attachments on it, and on there is the new pre-tax paperwork, and it has on there the section where you can select what you're going to contribute to your HSA. It wasn't on the original. We caught that right after we sent it off. So look to that second email, and if you still don't have it, anybody still doesn't have it, I can forward off just one email with that pre-tax one on there again, so everybody has it.
Okay, thank you.
And Brian, that is so that you can, so Billy knows what to tell payroll how much you want to contribute per pay period. But if you enroll in anybody that enrolls in that high deductible health plan is automatically going to be enrolled into an HSA account with ActWise. So that's why I was saying earlier, if you don't want the health savings account piece of it, you just want to have the high deductible health plan, you're going to need to reach out to Anthem directly to cancel that savings account so that you're not charged $2.25 a month for an account that you don't want.
Well, I would encourage everybody on the phones, if you go with this plan, take advantage of the HSA. That's a 30% pay raise on any medical expense you have that can be covered. It's a no-brainer.
Yep, absolutely. And the funds, so not only do your premiums come out pre-tax for the plan, but your HSA funds come out pre-tax. That's all before your FICA taxes. So it's a win-win. I mean, it lowers your taxable income that you're responsible for. So it's absolutely a no-brainer. But again, everybody's situation is different. So do we have any other questions?
Does that cover vision as well? So if you want glasses or other?
Can you use your HSA funds for that? Yes.
Yes, I believe you can. Yeah. Okay.
Absolutely. Yes.
Or contacts or any of that.
Yep.
Do you use your
Lenses.
medical coverage for that?
Yeah, you can use it for lenses, your eye exams. You can use it for LASIK surgery. Yeah, definitely can use it for vision coverage as well. You can use it for acupuncture even, if you're into that. Billy has my contact information, so if you guys think of any questions in the next, however long you're trying to make your decisions, I mean, I'll try to answer any questions you have. But again, I can't advise you on which way to go because everybody's situation is going to be a little bit different, and so it's a personal preference. It's a financial preference. So, but I'll be happy to answer like any questions about the plans or how HSAs work. Any additional questions? Are we good?
Thank you.
Okay, thank you guys. Have a great holiday.
Thank you.